everyone sort of dreams of being a professional footballer, I suppose, if you're into sport.
Yeah.
I knew it wasn't going to happen for me, so I thought numbers and maths is the way for me. I just sort of looked into it, and accountancy seemed a natural fit for myself. And I was quite lucky. I knew quite early in my teens that I wanted that to be my profession going forward. And I say, look, okay, let's have a look at your management figures. Where are we sitting at? And they'll say, oh, I'm going to be earning this amount of money now. I said, well, you do know you're going to get corporation tax charge of this. They're like, oh, I don't like the sound of that. And I said, no, well, I don't expect you to. I can't believe that you can do a good job by seeing your client once a year. And I promote trying to get in touch, even if it's the minor thing, it could actually be something quite important, so we can deal with it. We'd also say, okay, let's get your company name. We talk about directors. And I always say, it's best to have 2 officers in the business, because if one ever happens to one of them, you've got another person who can sign the checks and make the decisions. A lot of clients do say, oh yeah, I've made this month, I've made this turnover this month. I said, yeah, but that's great, but actually what's that profit figure? Like, oh, well, it's not that great. Well, obviously there's something going wrong in the middle there.
Welcome to the Business Sense podcast. I'm Gary Crosby. This is the podcast where we make sense of the business journey by talking to owners about what they've learnt along the way. Let's jump into today's episode. Matt, thanks for joining me this morning on the Business Sense podcast. Looking forward to this conversation.
Yeah, no problem at all.
There's lots of different ways it can go, so let's just explore the subject of finance. But, you're part of Moore Thompson, one of the biggest accountancy firms in the region. Just tell us a bit about what your role is in that company.
So I've been at Moore Thompson since 2008. I did work for another local firm in Wisbech. So I started my career in year 2000, come over to Moore Thompson when the firm I was with merged with Moore Thompson. Been there, like I said, May 2008, came there as an audit accounts manager, and then became partner in April 2018, and have remained partner ever since. So we've got 11 partners, nearly 90 staff, 4 offices, been around, pretty much nearly 100 years. So we're fairly well known in the area, know local businesses and know how to deal with their finance and business issues.
I saw on the website 99 years was being promoted.
Yes, yeah. There might be a rumour going around that we might try and celebrate our 100 years next year. So look out for that.
It's a good number. And how did you get into accountancy? Was it following somebody's footsteps or something that happened at school?
I think at school, I always liked maths, I always liked numbers, and it was either that or sports of what I wanted a career in. Everyone sort of dreams of being a professional footballer, I suppose, if you're into sport. I knew it wasn't going to happen for me, so I thought numbers and maths is the way for me. I just sort of looked into it, and accountancy seemed a natural fit for myself. I was quite lucky. I knew quite early in my teens that I wanted that to be my profession going forward, and I just followed it, and I've done okay. I've done the hard work. I've done the exams. I've got qualified, and I've got where I am. So I'm pretty pleased about that.
Yeah, and please don't take this the wrong way, but often I say to my coaching clients, at the start of the relationship, I say to them, "Have you got an excellent accountant?" And very rarely do I get a yes to that, because people say, "Well, I've got an accountant, but I only really see them at the end of the year," and things like that. Just from your perspective, is there a proactivity in Moore Thompson? Do you try to be more than just that end of year accountant?
Absolutely, and I would say as a bare minimum, to speak to your client before the year end. And you say, why do you do that, Matt? No, I'll do that because one area that a client would like to get advice on is mitigation of tax.
Yeah, of course.
So you can't do anything about that usually after the year end's passed, and you see them with the accounts, 6 months later. It's all historic. You can't do anything. So I often see them 2 months, a month and a half before the year end, and I say, look, okay, let's have a look at your management figures. Where are we sitting at? And they'll say, oh, I'm going to be earning this amount of money. I said, well, you do know you're going to get corporation tax charge of this. They're like, oh, I don't like the sound of that. And I say, no, well, I don't expect you to. And I say, okay, well, here's some options to mitigate this. And we talk about that. And this is all done before the year end. And so to me, that's a bare minimum. And I've got a lot of the clients in my phone, so I just ring them once in a while and just say, look, how's things going? We haven't caught up for a few months. They might turn around and say, yeah, everything's brilliant, Matt, no problem. Okay, catch up. Or they might actually sort of say a bit more and say, oh, I've got this issue, and then we talk, and then come and see him and we help. So I can't believe that you can do a good job by seeing your client once a year.
No.
And I promote trying to get in touch, even if it's the minor thing, it could actually be something quite important, so we can deal with it. So.
Yeah. Good. And I'm noticing, as all of my clients are noticing as well, that the business landscape is changing a lot. Money is becoming more and more expensive. Just thinking about your group of clients, what kind of challenges are they facing just now?
I think the cost of living crisis has hit home on some of these, and more the rising of interest costs. So before, where they've took borrowings, which is important for a business to grow. In the past, they've seen that quite low. Base rates have been quite low, and so therefore it's not been a massive effect on cash flow. Now we're seeing the base rate is at 0.75%, and therefore the repayments are a little bit more. Other things are going up, so it's quite a challenge keeping on top of that. So we've got to look at things and say, well, how do we combat that? And effectively, it's going to be a review of overheads and review operations and margins and everything, associated with your financial statements to see we can improve that situation.
Yeah, and then there's also a lot of challenges that come from things that are seemingly completely out of our control. The increasing cost of materials after the Ukraine war and stuff like that. Do you see people really being hit by that sort of?
Yeah, I've certainly seen that in some of the trade sectors. For example, they give quotes to a customer and they take that on, and all of a sudden the materials shoot right up, and all of a sudden their margins, what they thought were going to be, are actually squeezed quite a considerable amount. With that type of situation, I do encourage them to you've got to constantly look at their margins, and look at the efficiencies of how you do your jobs, especially if you employ quite a large workforce. You need to make sure they are efficient and you utilise them in the best way. But at the same time, also, keep an eye on these prices for your materials and costing your jobs out correctly, because if not, margins will be squeezed and your profits will come down.
Yeah. Do you ever see anybody who, reprices a contract afterwards? I've seen a couple of people hinting at that.
I think I've been able to, speak to them and say, well, you've got to say this quote's only valid for a certain amount of days. And I know that sounds quite an obvious thing to do, but, be surprised where, people are rushed off their feet and, they're just trying to get jobs quite out the door, then that sort of exclusion from the contract is missing. But that is vital. And I think sometimes if you quote a job and 30, 45 days later, these prices go up, it is quite difficult to get you out of that situation. So I do try and say, the quote is only valid for, I think some say in 14 days, because of that price increase. So, I think I have seen where they have tried and some have said, okay. And then obviously some clients have dug their heels and said, no, that's the price. You've got to stick to it. So that is a challenge.
Yeah. And people can end up doing jobs at, zero profit or very tight margins if they do that. Yeah. Interesting. And the other challenge that I see certainly in my client group is around, the human beings in the business, the challenge with employing staff and keeping good staff and things like that. I know that's not strictly accounting, but do you notice that in your clients?
Absolutely. I've seen that in a lot of sectors. I've seen in the haulage sector, quite a few months ago, they've been unable to attract decent drivers. And when they do, they had to pay, they call top dollar for these because and over above the market rate, because they're just so hard to get hold of. So I think in certain sectors there is a skill shortage. How we deal with that, I think that's going to have to be some kind of maybe policy from the government to attract, people to get these skill sets trained. But it's certainly a challenge, and I've seen it quite a lot. And I think what that means, how we can help, is maybe advise a ways to retain staff in terms of remuneration package. I don't think it's all about a salary and overtime. I think going back 10, 15 years, I think that was surely the main driver. I think now, the different generation of people coming through, it's more about well-being, potentially having a decent work lifestyle balance, be able to work from home, have some flexibility. Some of the benefiting kinds like private medical. I think all that needs looking at, and maybe I recommend some business, speaking to someone in HR. Actually, I know that's investing a bit more money in another area, but actually, staff is probably one of the main areas where you need to keep happy, because without your staff, you can't do your work.
And once you've found somebody good, you really ought to be working hard to keep them.
Oh, absolutely. And listen to them. Keep in touch with them, because you may think they're all happy and working because they've not said anything, but a lot of these staff bury it, and the only time you get to hear the issue is when they say they want to leave. So so I think constant just keep in touch and speak to them. It might be 3 to 6 month appraisals, mini appraisals, just to see how they are, how you're going, and what matters to them, because a remuneration package for that person might be different to another person.
Sure.
Because they have different, they're just different stage in life. So maybe someone towards retirement age might think, actually, I wouldn't mind an extra percentage pension contribution. Whereas someone a bit lower on, who maybe is trying to raise funds for a mortgage to start a family, might actually want a bit more in their wage packet. So I think it's listening to your key members of staff, and then being able to retain them by giving them an attractive package.
Yeah, good advice. I was also thinking about the mistakes that business owners make, and very often you get people who are going into business, they're very good at something, the money-making activity, and it's a bit of a shock to them that they have to become the head of marketing and the head of sales and the head of finance and the head of HR and all that sort of stuff. In that stage of business at the beginning, what kind of mistakes do you see people making?
I think I see that they invest in the wrong things. So for startups, they try and keep costs at a bare minimum. They want to try and make sure they make enough money from that, which I totally understand. Yeah. But I think sometimes if you can invest in, I will say this because I'm a good accountant, you may have to pay a little bit more, but the advice they should give you should actually save a lot more than you're paying that accountant. Even invest in things in marketing and advertising. How are you going to get your business to grow if you don't invest in them areas? And people cut them costs right back because they feel they just want to, save the pennies. But I think to grow, you need to spend a bit to actually grow a lot.
Yeah.
So I do often see that a bit of a key area. And also, I think sometimes the business planning, before they actually start, doing the research, ensuring that, their target audience is what, is correct, is right for them, ensure that they are going to be providing the services and products, which is actually, profitable. They might be able to provide a lot of service and a lot of product to a lot of people, but actually the margin that's just very small.
Yes.
So, you obviously heard the term, the busy fool. And that's, and all that's to do is planning. And I think it's the time thing. I think you've got to have the right preparation for able to work out what's the best thing for the business going forward, and them areas is certainly something they should be looking at. Yeah,
that's great advice, because I was thinking about the important things at the startup. You go on the internet, you pay £12, you become the director of a company, and then you're in that setup phase. When you get people at that phase, do you advise them on a particular way to set up their bank accounts and their digital accounting and that sort of thing to really get into the right position at the beginning?
Yeah, absolutely. If they can, I'd like them to come and see me before they do anything, before they incorporate. Sometimes it's always a little bit late, but if they can come and see me and say, right, Matt, this is where I'm going, this is what I'd like to do. Yeah. What would you advise? And first thing I'd say is, okay, we talk about the strategy of the business, where you want to go, who's your target audience, a bit like what I mentioned before. But we'd also say, okay, let's get your company name. We talk about directors. I always say, it's best to have two officers in the business, because if one ever happens to one of them, you've got another person who can sign the checks and make the decisions. Also, as well, we said about we need to get the bank account set up, and we talked to them about whether a digital bank account is good for them initially, because a lot of these come across with free business charges. But some of them say, well, I have an existing relation with my existing high street bank, and they want to retain that. So again, it's a bit of talk and discussion. But also we talk about, how you're going to maintain your financial records, how you're going to monitor the progress of your business. So we obviously recommend a cloud accounting package, which is usually your Xeros or your QuickBooks, which are probably the main popular two in the market. So and that's vital, because if they can't monitor how well they're performing, how do they know they're making profits? They say, well, I've got some money in my bank. Well, that's just a snapshot at that time. That doesn't tell the whole picture. So we encourage them to take a cloud package because it's internet based. We can review them figures. We don't have to go to the clients to have a look at the numbers. We can just log on and we can have a look and see how well they're performing and give the advice as necessary. And we encourage them to look at them numbers on a monthly basis and to see how well they're performing. And if we want to take that bit further and they're doing budgets and forecasts, we say, okay, well, let's compare it to that. Let's see why has it gone better or why has it gone worse? There must be fundamental reasons. And then if there is reasons why it's lower than budget, then we say, okay, well, this is how we do to overcome them challenges.
And often I find clients, they because they're specialists in their own particular field, that they don't have that financial knowledge, and that it can be very, very demanding of them to suddenly learn about revenue and gross profit, net profit, profit margins, break even, all that kind of stuff. Is there a role for accountants to educate their clients, or do you push them towards a source of education?
I think if you want to be a good proprietor, you need to have that knowledge. And I would say lean on myself or lean on a business coach, because they both do very crossover roles, I would say, in that respect. But you need to understand that that's whole part of the whole package. When you're the proprietor of a small business, you are basically head up all the roles. You head up HR, you head up finance, you head up operations. I wouldn't say you need to be an expert, but I think you need a sound understanding of what's going on, because how else can you make them big business decisions if you don't know, the basic financials, the numbers. And we do provide that advice. We say, look, these are the things you look out. These are your headline figures. If you drill into these numbers, this gives us your overheads and everything else. So we do educate them, but sometimes they say, look, Matt, I haven't got the time this present. Can we lean on you and you do the analysing the performance? And we're happy to do that.
Yeah. We'll definitely talk about management accounts a little bit later on. I'm thinking also about mindset at this early stage, because of course, if I look at the full spectrum of my own coaching clients, there are people who are very, very tightly connected to the numbers, and they could quote their margins with no difficulty at all. And there are people like you mentioned earlier who, they look at the bank account, and if it looks like there's a sort of enough in there, then that's good enough. How do we get people's mindset, towards that end of the spectrum where knowing the numbers is really important for you?
Again, I think it's just education, and explain it to them. And again, they might look at that and say, well, I don't quite understand it. Well, okay, let's talk through this. Let's see the importance. This is your sales. That. I think what's another saying? I'm throwing over these sayings here, but turnover's vanity and profit's sanity.
Yes.
And a lot of clients do say, oh yeah, I've made this month, I've made this turnover this month. I said, yeah, but that's great, but actually, what's that profit figure? Well, it's not that great. Well, obviously there's something going wrong in the middle there, the margins, the overhead. So again, you mentioned it, it's education and explaining to them what they should be looking at. And that is something that is said a lot, my turnover's great, turnover's gone up, but when you sort of look at the numbers, you think, actually your profit's down. So, there's something not fundamentally right in that middle section. Yeah.
And I also see clients that get surprised every year when a bill lands, or every quarter when a bill lands. And what's the role of the accountant in eliminating, if you like, these surprises and saying to people, you know when this VAT bill's going to land, when this corporation tax bill's going to land?
Yeah, absolutely. So I do get into the habit of saying, right, you really wouldn't mind having a second bank account. So if they're VAT registered, for example, why don't you just put 20% of that income in a separate account? So therefore you're budgeting for your VAT. And that's the same for the corporation tax. If we're looking at the profit on a monthly basis, just a very simple calculation of just doing 19%, that's your corporation tax. Let's push that into a separate account. And there is some quite clever digital bank accounts which you can do pockets. So you can do separate pockets for save your VAT and save your tax. But even if you haven't got that facility on a digital bank account, you just set up a separate bank account with the high street. And it is it's not a difficult thing to do, because if you get in that habit knowing, right, every sale 20%, you'll be laughing, because you'll always have more than enough, because obviously you're going to have input VAT on your costs as well to consider. Exactly. But it's just help managing that cash flow. And you do see it, oh, I can't believe I got all that VAT. And then you speak to them and say, well, you do know you've generated an extra 20, 30 grand sales this month. I'm like, oh, have I? And again, it's just that education and keep an eye on the numbers. But I'd say a lot of our clients do make provisions for that. So I feel like they have been educated quite well.
Yeah, I've got spaces in my Starling bank account for the same thing, like the pockets you were talking about. And I also say to my clients, you are an unpaid tax collector for the government. That VAT is not yours. It never will be yours. You're just hanging on to it for a quarter until you pay it on.
Correct, yeah.
So that startup phase, we get everything set up, and things are organised, and people are starting to focus on the numbers. They get that, and then they come to this kind of growth phase. A lot of accountants I know provide business advice and growth advice. What's the approach in Moore Thompson if someone really wants to scale up?
Yeah. So we would have a sit down and talk to the client and say, look, we're looking to grow. And one of the things that we see, I've not seen it too often, but I've seen the danger signs is growth too quickly, in i.e. the overtrading scenario, which basically means that they're generating all this extra growth and turnover, but it means they are forking out lots of money for materials and labour, and whatever reason, not able to get that money from that customer, so therefore they grow so quickly, but actually their cash position is a lot worse off, and therefore they struggle to pay their debts and they get in a lot of trouble. So we have to make sure that we manage that expectation with the client and say, look, you need to make sure you grow, but not too quickly, and that you're always under control. And you need to make the decision whether to take that extra person on. You need to take the decision is whether you can actually do that job, fulfill that requirement, because you might say there's loads of jobs coming in all left area, all left, right, and centre, and you decide, yes, I'll take it on. But actually, can you do the job? Are you going to let them down? And then you've got reputational risks because you're letting people down and people talk. And so it's really just managing it and sometimes calming the client down and say, look, this is great, but let's just sit back, reflect, and say, look, can you do that job? Can you commit? And a lot of them say, actually, I can't. I say, well, no, just say to them, say, look, we can do that, but it might be in 2-3 months' time. And if they really value and want you, then they'll wait.
That's great.
So again, I have seen it. I've actually, in the past, in my career, I've seen it where it actually has meant they've had to cease. But I think, again, it's all about this communication with your advisor. If you talk to them regular, they'll be able to, pick up on these warning signs and give the advice.
Yeah, that's great advice. I was thinking about then the role of the accountant when it comes to companies that are scaling up and they're starting to, as you said, use budgeting and forecasting, and maybe they're getting into management accounts. What kind of difference does that make at that stage in business? Yeah,
so the management accounts is basically a monitoring performance. So these danger signs which I've been talking about, a lot of these could be picked out from your financial figures. So it's important that these are prepared promptly. So we're coming up with a September month end. Ideally, them figures want to be prepared by the 14th. The 14th of the following month. And yes, that might put someone under a bit of pressure to get the invoices in, but what that means is real time. It's real time numbers. And these things, it's not. The management accounts consist of your profit and loss and your balance sheet. So looking at it as a whole, that will say, look, actually my debtor days are really high. My bank balance is really low. That's a warning sign to say, what are you doing about that? Are you growing too quick? And therefore you might need to look at your credit terms. You might need to have a look at different, like invoice financing, which is a way of getting your invoices in quicker. So again, it's fundamentally important, especially in growth, that you keep a look at that and make some time to go through the numbers and particularly with an advisor, just say, look, this is what I've got, because they might be able to interpret the numbers a little bit more differently than the client because of their experience in that area. And the client said, I really need to invest in some equipment, and you actually say, well, actually, you haven't got the funds for that. Or, okay, we might need to get finance for that because of the funds, These decisions can't be made without seeing them numbers. You might have a feeling or a whim to say, I think I do, but that's not good enough. You need to be sure of the decisions you're making, and that's why their management accounts are vital.
And I see that a lot when people are thinking about expanding their team as well. And they're looking at, I can feel the pressure on myself. I can feel the pressure on the existing team. I'm thinking about employing somebody else. How do I make a decision based on the numbers that I'm looking at that now is the right time for that?
Yeah. So, first thing you need to know is, like, if I recruit somebody, how much do I need to pay them? What benefits do I need to provide them? What extra overheads will that bring for that individual? And then also you need to say, well, actually I need to make profit on that individual. So once you've worked all that out, you say, well, okay, I might actually need to make an extra £100,000 turnover in relation to this. And if you think, well, actually, I don't think I can, then you need to sort of set back and say, well, okay, that's not the right time. Perhaps I need to look at my staff efficiency. And are they being utilised correctly? Are they, if they're working on various jobs in different areas, are they actually working in the right order? And am I using their skill sets correctly? It might be, the reason they're taking so long is because they're perhaps a little bit short on the skill set to actually complete the job. So again, it's just working out, whether it's worth taking them on, or actually do you need to increase the efficiency of your staff that you already got? And again, the numbers will tell you all that information.
Yeah, and this is really fascinating for me because it blurs the lines between pure accountancy advice and actual business advice. And I think a lot of accountants, are very focused on just the numbers. But it sounds like Moore Thompson's got a slightly broader view of helping people to grow.
Yeah, I mean the numbers in the accounts and the tax, that's all compliance and that's all good, and we do that very well. But the value is the advice. What we're talking about, the business advice and helping them with the business grow, helping them stay afloat. That's where the client gains value, and that's where we excel at a lot more, Thompson. That's what they want to hear. That's effectively what they want to pay for. That's what they want to hear from their advisor.
Yeah.
And if you can give them the right advice and steer them in the right direction, they'll thank you for that and remain very loyal. And then you're basically working as an FD for some of these businesses, and that's what they need, because as we mentioned earlier, they're not natural accountants. Yes, they need some background of the numbers, but they need someone with a little bit more expertise to take them forward, and that's where we come in and help them with that.
So is there a sense that sitting with an accountant could also be a business planning activity, and how far out do you encourage people to look to make sure that things are set right for the future?
Yeah, so I guess we're sort of looking at forecasting there and predictions. Sometimes we can look at it just as a 3-month basis, but sometimes we look to go for a year. I think anything beyond that is maybe a bit too far ahead, because a lot can happen in a year, as we've seen in the last few years in the UK. So, but I think planning and forecasting is, again, vital, because they might know there's certain costs that go up in the year, or there's certain variations in seasonal business which they need to be aware of and budget for. So if they can do that, and again, we can assist, and there's also tools available to link with their accounting software to help them forecast. Again, it will help monitor and steer in the right direction.
Yeah. And then you mentioned earlier on about financing and debt and things like that. Just give me a kind of overview of where you would stand in terms of helping a business to finance future growth, and where that money would come from.
Yeah, so ordinarily I would first say, let's check your bank. They're the one you've been loyal to. They're the ones you've put money into in the last X amount of years. So let's talk to them. Let's see what options they've got. And if it's going to be a very short term loan, it might be we need to extend overdraft. Or if it's something that's for a project or for a capital item, then we need to look at something like a business loan, depending on the quantum. If it's going to finance a particular asset, then I would probably look at something like hire purchase. But it all depends on the length of that investment, and the repayment terms, and the interest is going to charge. So they're just some areas where we would look into. And it depends. Sometimes you can get stock bridging loans. It depends if it's a highly stocked business where they finance on the stock. I've not seen that so much recently, but that is an option there. And we've also talked about invoice financing as well, where the bank buy the debts and they release money to you, and then the customer then pays the bank, and they obviously charge you interest for that privilege. Again, I've seen that work very well in certain industries. So again, I think there is various options out there, but I think we'd have to have a look at what's right and on what you're actually financing.
So let's look at how business owners take money out of their businesses. There's lots of different ways to do that, isn't there?
There is, yeah. So probably the one you've heard of the most is the low salary, high dividend route, which still to this day in a limited company is probably the most tax efficient way of taking money out of your company. How that works is you take a small salary around the 9,000 mark, which takes you up to your national insurance limit. So that will contribute to your state pension, and then you take the rest out in dividends. And we recommend to take that up to about 50,000 because the higher rates of tax kick in from over that point. But there is actually other ways you could maybe look to remunerate yourself if you don't necessarily need the cash out of your business. We talked about benefits in kind, so you might want to provide yourself with a vehicle and let the company pay for the running costs for that. We would recommend at the minute electric cars, because there is actually some good tax breaks for them at the minute. If you buy a brand new electric car, you get 100% tax relief. So, for example, there's a popular one called Teslas, as we all know about. They're probably 45, 50K, some of their models. You finance an HP, So that would mean that you don't have to fork out 45k, 50k straight away. And you'd get that allowance straight off, knocked off bottom line for tax, which is fantastic. And
Wow.
also, you're going to be provided for personal use, so you'd have a benefit in kind on that, which is worked out for electric cars at the present moment of 2% of the list price. So, for example, if it's a 50 grand car, 2%, you're going to get taxed on £1,000. So that is quite a good way of remunerating yourself, and you're not actually extracting any funds out of the business, but the company's providing you with a company car. So that's one area. Another way which is helps with the tax efficiency as well is actually if the company make pension contributions on behalf of the directors.
Sure.
So if you don't necessarily need cash out of that business, and for example you're hitting that 50k barrier where you don't really want to pay high rates of tax, then the company can make a pension contribution on behalf of the director. Currently, in the minute the rates is up to 60,000 per year. You can make, and there's no lifetime limit at this present time. So we can keep carrying on with that.
That's interesting.
And you can also go back 3 years as well. So if you've not made any contributions in the last 3 years, you could actually increase that contribution and make a massive saving in the company. Just as long as that you've already got a pension scheme set up, then you're able to do that.
So lots of different ways for people to remunerate themselves, and then also lots of other expenses and places where you can, make efficient use of company funds.
Absolutely. So if we're talking that to sort of tax mitigation, then one area we look at, and we mentioned this earlier in the talk, is that meeting before the year end. If they know that they're going to make a decent sum of money, hence corporation tax, and if they are looking, and I will reiterate this, if they're looking to purchase equipment, then maybe fast track it to actually buy it in that accounting period to make use of the capital allowances. We've got the annual investment allowance, which is up to £1 million, and there is also a new allowance that HMRC introduced, or the government introduced, which if they buy brand new equipment, they get full write down on that as well. So I say about only if they want to do it, because a lot of people try and spend money willy-nilly to save tax. Whereas I don't advise that. I just say if you are looking or planning to purchase equipment in the next 6 to 12 months, then why don't we fast track it, move it forward to help the tax savings right now.
And then there are some sort of fairly minor things that you can do for yourself and for your staff that just, again, it's tax mitigation, but it's also giving you an opportunity to say thank you to people. And
yes, so a bit of a favourite of mine is something called trivial benefits. I say it's not a massive tax mitigation scheme, but like you alluded to there, you can actually provide gift vouchers to your staff up to the value of £50, but it can't be a work-related performance. It's actually for things like birthdays or Christmas or work anniversaries. So it can't be work-related, and they call it trivial benefit. But to staff, there's unlimited amounts of £50. Now, I wouldn't say go ahead and think of every, like the dog's birthday and everything like that. But again, it is just a good way of sort of recognising that staff, and they do appreciate it. I know £50 doesn't sound a lot, but actually, one day say, "Oh, happy birthday! Here's a voucher." They actually, "Oh, okay." They perhaps do value me. And the only caveat is that for directors, you're only allowed 6 occasions a year, so it's up to 300 per director. So if there is 2 directors, husband, wife, company, then potentially there's £600 worth of gift vouchers there.
So I could give myself £50 today because Liverpool had a good result last night in the cup.
I'd love to say yes, as a fellow Liverpool fan, but I would say more for your birthdays and Christmas and work anniversaries. Like you say, you can get a little bit creative, but I mean, at the minute, if we give one for every time we win, we're going to have quite a lot of gift vouchers, aren't we?
So that's good. Good stuff. So I want to go back to 2008. You've joined Moore Thompson, so you've been there now for 15 years. This collective experience, just to finish off, if you were talking to somebody who was thinking about going into business, let's think about the top 2 or 3 things that you would say to them to really get them off to a good start. Yeah,
sure. I would say first thing you need to do is plan. You shouldn't be entering into any kind of situation where you're not ready for it. So you need to do your homework, you need to do your research, you need to ensure, okay, this is what I'm planning to do, and this is a service or product, who's my target market? Is it already is it already crowded market? Are you just going to be a very small fish in a large pond there? So you really need to do your homework to say what you're going to be delivering, and whether it's worthwhile. I think once you've done that, it's then obviously work out kind of your projections, work out, what you're achieving to do, and whether it's going to make money, because you might have this great idea, and then you put all the numbers on paper and you think, actually, I'm not going to be very well off here. Sounds like a lot of effort for little rewards.
Yes.
So
Yeah.
I'd be doing that for starters. I mean, if them two have all ticked, then the third thing I would do is actually see a decent advisor.
Yeah.
And I think sometimes this is the bit of the drawback. When people start businesses, they want to cut costs or keep to a minimum. So, but actually, if you see a decent advisor, someone like myself, we can advise, stay in the right direction, and it would be definitely a worthwhile investment. Don't see accountancy firms as an overhead, see us as an asset.
That's a brilliant way to finish off, because actually, if you do start well financially with all the things that you've talked about in the last half an hour, then it is going to save you a lot of time and effort in the future.
Absolutely.
Yeah,
Absolutely.
And you don't want to learn those bad habits at the beginning that
No.
then you have to get yourself out of.
That's right.
Matt, that's been an absolutely fantastic set of advice for people,
thank
and any business owner who's going to review this will see lots and lots of nuggets for them to think about in their business.
Yeah,
I really appreciate you taking time
Yeah,
to talk
no
to
problem. Thanks for having me. Appreciate
me.
it.
My pleasure.
Thank you.